is this another Tombstone event? Meaning, just circle it, be gone. This category is peaking. Okay. From our momentum perspective, where we look at price secondarily, but the long-term momentum of the market, you broke structure on a momentum chart that if you looked at the momentum chart rather than price chart, you said, oh God, we just blew the bridge. Okay. The rally back up since April low did not alter that. In fact, on momentum, it's to a lower high, despite price making a marginally higher high. So it's very important because I think this affects flow of money into certain other asset categories, namely, natural resource, gold, silver, monetary metals, even other more base metals. Whether suddenly there's a chorus out there, you can see it in some of the charts. And Momentum already said several months ago that, for example, it's time to buy copper miners again. It's time to buy rare earth minerals again, ETF. It's time to buy the lithium company ETFs, platinum stocks, and so forth. Platinum, which had not been moving with gold at all over the last years. And all of a sudden, all these metals, you throw a dart at them, they're all of a sudden moving up. Something's going on. A major asset class flow is occurring. And I think with the Fed panicking, as they normally do when their favorite asset, whether government debt or stock market, starts to break, they start to print more. The problem is for them, it never goes into where they want it to go. It's too late. It's already broken. It goes into gold and often into commodities. Mm-hmm. And I'm seeing that in just too many places, especially in the metals complex. And not monetary metals, but the other ones. All of a sudden, they're waking up too. What's going on? It's not particular to lithium. It's not particular to the rare earths. It's not particular to copper. It's a flow across the board. That's interesting. It's telling.
Yeah, it is very telling. And also, I want to reference the recent reports that you came out with were actually going over exactly that. I want to get to money flow and then go into gold and silver and the miners. But before I do that, the dollar looks like it has been rolling over and it looks like they want to get the dollar down. Talk a little bit about that. And you've been beating that drum for a while as well, but talk a little about that.
Yeah. First off, the stock market is very important to the metals, the asset class movement, because when you puncture that beast, and it is a bubble beyond all bubbles we've ever seen, measured.
Let me interrupt you. You are the fifth very high profile person that I have on my site that have said that. You're not alone. Now, I say that too. You have a different perspective because you're a technician, but you also love that you marry the fundamentals with the technicals. But go ahead.
But when that guy goes, money flows elsewhere. It always it doesn't all go down. Everything doesn't go down. People think that's an assumption. Stock market goes down, then everything goes down. No, it's not true. Those other asset categories that you mentioned, the dollar, for example, the dollar wasn't a factor. The dollar index, let's talk about. Now, the dollar index is nothing but one piece of crap versus 3 or 4 others. Okay.
Right.
The dollar index is primarily the euro and the yen inverse of them. Okay. That's like 70% of the dollar index. Okay. Now, that market, if you look at 2023 and 2024, was in a 7% range, basically. Boring as hell. Nothing was going on. Nice swings, but it just didn't go anywhere. So it really wasn't a market factor in terms of impacting stock market or the bond market or anything. It was dull. Now it's become one. Back in March, we put out a major sell signal. Price was 104.21 then, dollar index. We thought a major bear trend was starting. Since then, we've dropped down to 97. Right now, it's trading around 98. So it's had a decent little drop. We think it's just the onset of a major bear trend. So there's more to come. So that will have impact factors on other things like the stock market. In fact, if you go back 50 years and look at the massive swings in the dollar index and the massive swings in the S&P, there's a good coincidence there. A lot of people aren't aware of that. Okay. Other things, though, T-bond market is another market that has been in a dull situation, high yields, low price, 30-year T-bond futures, for example. Since late 2022, there was an implosion in that market, which we had forecast. And it's since then, you can draw lines sideways from October of 2022 through the action of the last couple of years, been above it and below it, but basically just nothing, range-bound situation. We initially thought there might be some basing action there, where you might actually get a counter-trend rally in the bonds, because annual momentum is already blown to hell. It's no good. But you could get a trend. It might last a quarter or two, upside. And it might be related to weakness in the stock market, but that's not proved to be the case. If you go back and look at T-bond futures, they made a high in early April and they collapsed with the stock market that final week of April, right along with the stock market. In fact, T-bonds dropped in 2 days, like 11 points, from 121 down to 110, 111. Unbelievable drop in 2 days, 2.5 days to be precise. And since then, right now, we're trading around 114. So there's no relief in the bond market in terms of yields dropping or price rally. It's just a choking event. And there's a lot of financial entities that are hurting because of that, because there's no relief there. So even if the Fed cuts, that's on the short end. They don't really influence the long end. So that could be another crisis type event where if the T-bonds, like today, they've traded down into the 113s again as we speak. If you get much below today's low, what we've seen in today's low, which is the low of the week, you could precipitate some downside that could create headlines, meaning, oh, gosh, this sleepy market, dull market is suddenly spiking, upside in yield, downside in price. That could be an upset factor to the stock market, would be. Jamie Dimon has said, this time around, government debt is not going to be pushed off so easily. And I think technically he's dead on, that we could get that type of event. Well, what would that do? First off, it would spook money in the stock market. That money will move somewhere. Where does it always move? Okay, we know. And I think it's already begun. I think we're starting to see that for some reason in base metals, lithium, rare earth, copper, even platinum has finally woken up. Well after gold has already been going up for a decade, I think the money's starting to move, but these other factors could, like you mentioned, the dollar, that could in fact impact further movement of money into the category we're focused on.
Yeah. So to all my viewers and listeners, I love how Michael gives the interrelation between the different asset classes. And I want to just really highlight, I couldn't agree with you more, this idea, and it's not an idea, it's an actuality of money flow. All of this money that's printed, it doesn't have to, but it has to flow somewhere, if you would. Mm-hmm. I love how you pointed out the weakness in the bond market. In fact, could be cataclysmic, if you would. It's really hard for me to see how equities, if you would, general equities, the S&P 500, how they make any money with bond yields that high, or this high, or what could become potentially much higher. But let's talk about money flow and where we think money flow is going to go, and it looks like where money flow is going. Let's talk about base metals first, if you would, and let's go on and gold and silver into the miners.
Well, copper is an example of, we're positive on copper. And in fact, unless you close a month out credibly back below $4, right now we're trading in the mid 450 zone, up and down. Trump had this tariff thing, it caused it to drop. What's so interesting is when you see the copper drop back into the mid 4 level from over 5, you look at the copper miners and they had a little drop too, but now they're pushing up new highs.
Right?
It's interesting. What, are they dumb, or do they know this is BS? After all, copper is an international commodity, produced internationally, consumed internationally. What one government says about the tariff on it or not on it doesn't ultimately impact the supply-demand factors. And ultimately what helps move it as well is increase in money flow. Japan, Europe, here, where we got to print to protect our bonds. We got to print if our stock market goes down. That money goes somewhere. I'll give you an example. Everybody's in love with the stock market. Well, since mid 2000, 25 years ago, summer of that year, summer of this year, S&P's gone up like 3.5 fold. That doesn't even keep up with the pace of the degradation of the money unit, the decline in the buying power of the dollar, or the increase in the quantity of dollars. Okay. Gold's gone up 11-fold. Okay. There's no comparison. So
Think about it.
we're talking investment grade time period. Okay. You can even go 10 years, 5 years, 3 years. You get the same result, yet nobody's aware of it. Some people are, but too many investors really still aren't. All the metrics, you know, they are. The American investors invested in gold and silver miners is like, trivial. Still trivial. They haven't gotten the fever yet. When they start to get the fever, and it's already probably started, as you can see, since April, gold's gone sideways, steady. Miners have exploded. What's going on there? Silver's exploded since where it was in April. Okay. Mama gold is held steady. It's not a top. It's just a congestion zone. Meanwhile, the compatriots there have gone vertical. So they're starting to outperform again, which I think will continue. But a lot of stuff is going on that indicates asset class movement, including in the base metals.